Recording in. All right, guys, in this video, I'm going to be teaching you on proper risk management when taking trades from the Pro Trader Group and Goldmine Group. So, guys, I beg you, please make sure you stay to the end of this video because this video is really what is going to, the things I'm going to teach you in this video is going to, determine if you are profitable or not. So, please and please, once again, make sure you stay to the end of this video. And if you do have any questions, please do not feel shy to ask. Please make sure you ask questions if there's any part that you do not understand, and would be very, very happy to help you. So let's go straight into things. So first and foremost, guys, you need to understand what risk management is. Risk management is just you basically managing your risk, so that you don't end up getting burnt by the market. And it is I would say personally, the main thing that keeps profitable traders profitable. If you want to be profitable, you need to make sure, you have proper risk management. So let's go straight into things. So now, if you want to, start taking trades, you need to make sure that you are taking trades from the right places first and foremost. So you are going to be taking trades only from PulseX, Nova, and Goldmine. PulseX and Nova are individual chats inside the Pro Trader Group. You do not, and again, I repeat, you do not want to take any trades at all as a beginner from Synergy. You do not want to take any trades. It doesn't matter if Synergy sends 1 million trades. Please and please and please do not take any trades from Synergy. I beg you. I'm telling you now, please do not take any trades from Synergy. We have reasons why. Do not take any trades from Synergy. Only take trades from PulseX, Nova, and Goldmine. I repeat, only take trades from PulseX, Nova, and Goldmine. And guys, you want to be taking nothing more than 10 trades a day. So the range, you want to be sitting at is anywhere from 3 to 10 trades per day. Nothing more. Nothing more than 10 trades per day. You understand? Nothing more than 10 trades per day. And now, depending on your account size, you want to be, using the appropriate lot sizes. You understand? If you have $100 account, you don't want to be using 5 lots or 10 lots. You want to use the lot size that is, going to make sure you are okay, regardless of anything, depending on your accounts. So if you have anywhere from $100 to $200 in your trading accounts, you want to use 0.01 for Goldmine and Nova trades. Oh, yeah. You want to use 0.01 for Goldmine and Nova trade. So any trade you're taking from Goldmine or Nova, you want to use 0.01 only once. Not twice, not 3 times, only once. Now, if you're taking any trades from PulseX, you want to use 0.01 twice in 2 positions. I repeat, if you want to take any trades from Goldmine and Nova, if you have anywhere from $100 to $200 in your accounts, 0.01 once. And if you want to take trades from PulseX, 0.01 twice. If you have $100 to $200 in your trading account, and you want to have a profit per day target, guys, you want to have a profit per day target. If you want to have a profit per day target, what does this simply mean? Once you hit this target, you stop trading for the day. Once you hit this target, you stop trading for the day. Quite simple. So if you hit, $10 to $20 in profit for the day, you don't need to take any more trades. Why? Because you've already met your, profit targets for that day. If you have a loss, you also need to have a daily loss as well. If you have a loss of anywhere from $10 to $15, you say, okay, I don't want to take any trades again for that day. You understand? You close shop. This is going to enable you to, be strict and be disciplined when it comes to trading in your accounts so that you don't end up blowing and you don't end up losing profits that you've already made for the day. You understand? So if you have a $200 to $300 account, you want to use 0.01 for Goldmine and Nova still 0.01 for Goldmine and Nova, then 0.02 and 0.01 for PulseX in 2 different positions. Any trades that you're taking, if you have $200 to $300 in your account size, 0.01 for Goldmine and Nova trades, and for PulseX, anywhere from 0.02 and 0.01 for PulseX trades. Or you can do 0.01 in 3 positions. It's still the same thing. Either 0.02 and 0.01 separate positions, or 0.01 in 3 positions for Pulse X. Our profit per day target is $20 to $25, $20 to $25 loss limit as well. Then for a $300 to $500 account size, 0.01 in 2 positions for Goldmine and Nova, 0.01 in 2 positions for Goldmine and Nova trades, then 0.02 in 3 positions, or 0.03 in 2 positions. I hope that's clear for Pulse X. 0.03 in 2 positions, or 0.02 in 3 positions for Pulse X. And you can see the profit per day targets. Then if you have a $500 to $1,000 account size, 0.02 and 0.01 in 2 different positions for Goldmine and Nova. Then for Pulse X, 0.02 in 4 positions, or 0.04 in 2 positions. Now, these are the lot sizes that you should use according to your account size, taking trades from Goldmine, Nova, and Pulse X. And guys, I beg that you follow, the instructions I'm giving on this video, because this is really going to help you. You want to stay disciplined. You want to make sure that, you're following instructions, because, this is what is going to end up, determining, this is what is going to end up, making sure you are profitable. Excuse my English. So now that you know the lot sizes to use depending on your account size, now the next thing you really need to, take note of is how to manage your trades. Because getting into the trades is one thing, managing it properly is another thing. Because if you don't manage your trades properly, you can see other people closing up in profits and you close up in loss. So how do you avoid that? How do you make sure you're managing your trades properly? Now, let's get into that. So first and foremost, guys, if you have more than one position, for example, 0.01 in 2 places, you want to make sure that you have a profit target for the first position. Then for the second position, if you want to allow it to ride, you have your stop loss at entry. Now, what do I mean by this? So, for example, this is an example of a trade given on Goldmine. This is how Goldmine trades will look like. Even Nova trades, will look something like this. You understand? So this is an example of a trade given on Nova or given on Goldmine. So as you can see here, we're told to buy. Now, this is just a rough example. So you can see that we were told to buy 49.84.50 to 49.79. That is like, that is the area in which we're going to buy. If we go to the market, or if we go to our MT5 and we see that the market is anywhere around that area, we are going to click on buy. You understand? So we're going to come here. Let's say now you get the signal. You're going to come to your MT5. You're going to come to your MT5. You're going to click on trade for gold. Then, you make sure that the lot size that you normally use is there. Then you can see this number here, this 58.56 that is currently moving, that is above sell by market. You want to always make sure that before you click on buy or click on sell, that it is around the figure that they gave. You understand? Because sometimes you might not see it at that exact figure, so you have to wait. But if you are fast enough, because when they drop these trades, the market price is already around the level. So you need to be very quick. That's one thing you really need to take note of. You really need to be quick. You understand? You need to be quick. So make sure it is around the entry area. Then you click on buy. So you click on buy. And let's say you want to take the trade again. You click on buy. Let's say you want to open 2 positions. So you click on buy twice. That is, if you want to take 2 positions, you click on buy twice. Now, how do you manage this trade? First of all, you need to make sure that you have input your stop loss. So first things first, you need to take the trade and input your stop loss. You understand? You need to take the trade and input your stop loss. So your stop loss is what? 49.76. 49.76. But in this case, we're going to use 49.76. But let's use like a random number, because that was an example. And markets is not currently at that price, but I'm sure you guys get what I mean. So let's say the stop loss was 49.76 or whatever stop loss that they gave you. You input the stop loss. Then you come again on the second position and you also input you also impute stop loss. So you click on modify position, then you impute the stop loss as well. Now, this is one way to do it. One way to do it is that you buy, then you now go and impute your stop loss. Now, is that the best way to do it? Depends on who you ask. You understand? It depends on you who you ask. Now, another way to do it is that you click on trade, you impute the stop loss first. So you go back, you impute the stop loss. So stop loss was what? 49.76. But in this case, let's say the stop loss was 4,000. You impute the stop loss, then you now click on buy before you do anything. So impute the stop loss first before you click on buy. That is another way to do it. Now, this way is probably the safest way. This way is probably the safest way to, take any trades given on, any of these apps or any of the chats, because, you're protecting your account, because this market can be very, very fast sometimes. You understand? So by the time you click on buy and okay, you've clicked on buy, you now want to click on modify position, then you now put your stop loss. The market might have done a mad thing, a very, very, very mad thing. So in order to protect yourself and to protect your account, I personally would recommend that before you even click on buy, so you click on trade, you put your stop loss first. You put your stop loss first, then you can now go and click on buy or click on sell, whatever the case might be. You understand? You put your stop loss first, then you can go and click on buy or click on sell, whatever case might be, whether they tell you to sell, whether they tell you to buy, whatever case that might be. And guys, please don't worry about this account as you're seeing it in losses. A demo account for me to, demonstrate, basically what you guys need to be doing. So don't stress. So now that you guys understand that, how to, put your stop loss and how to take the trades, because again, you have to be quick. And I personally would recommend that, before you take the trades, before you click on buy, before you click on sell, make sure that you put your stop loss first. Okay, now back to the main point of, managing the trade. So now let's say, let's say you were told to sell in this case. They tell you to sell. So now what you do is that you put in your stop loss, you sell, you put in your stop loss, then you sell, then you go again, put in your stop loss again, then sell. So let's say you want to enter two positions, and maybe this trade was you have maybe depending on your account size, you put in your two positions now, and you want to manage this trade. Let's say now, for example, okay, you've taken the trade and you want to set your take profit levels. How do you go about this? Now, if you see what I said here, I told you that, if you need to target TP1 or TP2 on your first position. Now, as you guys can see, there's TP1, TP2, TP3, TP4, TP5. You can use any of these take profit levels on your positions. If I were in your own situation and I was in more than one position, what I would do, I would personally, so I'll click on modify. So I'll click on the position itself, then I'll click on modify. Then I'll set one position. I will set either TP1 or TP2. So in this case, let's say TP1, let's say I want to take TP1 now, for example. So I'll set TP1 in this case. So TP1, let us say TP1 is 4,800. Let us say that is TP1. So I put that as my TP1 on one position. Then on the other position, maybe I don't want to, set only TP1. I want to make more money, because if you go for TP2, TP3, TP4, TP5, you would make more money than you would do on TP1. So what you want to do is that you want to keep that one position that you put TP1 in, keep it as that. Then on the second position, you can now choose to select any other take profits, whether that is TP3, TP4, TP5, that's up to you. I personally, I recommend don't go anything higher than TP4. So if you want to take the last position, put TP4 there. Don't go anything higher. You can do TP3, you can do TP2, but don't go any higher than TP4. So you can now put TP4. So let's say TP4 is 3,500, for example. Let's say that's a TP4. So now what have you done here? You have put TP1 in one position, Then on the second position, you now put TP4. So like this now, if TP1 hits, one of these positions will get closed. That's if TP1 hits. If TP1 hits, one of these positions will get closed. Then this will still be running in profits. Then it should close when it hits TP4. So now that you said this, what next do you want to do? Immediately this trade hits TP1 and you are closed in profits. The next thing you want to do is to modify this your position and shift your stop loss. So this is what we call breaking even. This is what we call breaking even. So you're setting your break even. This is move your stop loss to entry. You understand? You can see it here. Hold the second position to your desired take profits with break even. So that means you adjust your stop loss to entry. So immediately that first trade closes at TP1 and TP1 has hit, the next thing you want to do is to move your stop loss to entry. And how do you know your entry? If you guys can see, let me see if I can. Yeah, I can. If you guys can see this, you see this number here. Oh, hold on. Let me change to. You see this number here? It's not that clear. Hold on, guys. Sorry. Yeah. Can you guys see it? Okay, yeah. I think it should be a bit visible. Yeah. You see this number here, 48.49. That number there, that is your entry points. That number is your entry points. You understand? So when you enter the market, that number, you see that it always remains stagnant. That is your entry point. So what you want to do is that you want to come here, click on modify position. You see that number that I highlighted. You want to now turn that into your stop loss. So in this case, it's 48.49.823. So we're going to do that and turn that into our stop loss. 48.89. Sorry, was it 48? Yeah, 48.49 rather. 48.49.823. So we'll do that. Then we'll now click on modify. Immediately our trade is in profits. Take profits one has hit, and we are seeing blue. We are seeing profits. You want to immediately modify your second position. Modify your second position and make sure you move your stop loss to your entry. Once you have done this, guys, this basically means that you are risk-free. Doing this basically means that you are risk-free. Risk-free in the sense that even if this trade reverses, you are not going to be closed out in loss. You understand? So this basically ensures that you have put some money in your pockets because you close when TP1 hits, and you've also, made sure that no matter what happens, you are not going to lose any money. You understand? So this is something that is very, very important, guys. Make sure you do take note of this. Anytime a trade hits take profits 1 or take profit 2 on your first position, make sure you move your second position, move the stop loss to entry. You understand? Very, very, very simple. It's not complicated at all. And if you don't have any question, maybe you did not really understand this, please make sure you reach out. Make sure you reach out. Don't feel shy. Make sure you reach out. So that is how you should be managing your trades. If you have more than one position open, target TP1 or TP2 on the first position. Then the second position, you can hold it to your desired take profits, but make sure you have your stop loss and entry. Immediately the first position gets closed out and you are seeing profits, move your stop loss to entry. Very, very simple. Very, very simple. Now you might ask, okay, for those of us that maybe use one position, because if you have anything less than $300 in your account, you're only going to be using 0.01 for gold mine and Nova trades. So what you do in this scenario is that you only target TP1 and TP2. TP1 or TP2. You understand? Only target TP1 or TP2 because you only have one position. If you have less than $300 and you're trading gold mine and Nova, only target TP1 or TP2. If you're in that scenario, you only have one position. That means you cannot, if you only have one position, just do that. Target TP1 or TP2, and you'll be good to go. Target TP1 or TP2, and you'll be good to go. So that is how you should manage your trades. So guys, this is very, very simple. That's an example for how a gold mine trade looks like. Now, this is how a Pulse X trade looks like. They'll tell you to sell gold at this particular zone. They'll give you the stop loss, give you the take profits. It's still the same procedure. If you have more than one position, targets for your first position, target TP1 or TP2. Then for the second position, you can now target the third take profits or the fourth take profits. Now, Pulse X, most of the time, they only give 3 take profits or 4 if you're lucky. So if you are trading Pulse X and maybe you want to target the later take profits, it will be TP3 in this case. So for your second position, you'll be targeting TP3, while for your first position, you'll be targeting TP1 or TP2. Very, very, very simple. Very, very, very simple. So, guys, this is how you should go about managing your risk, managing your trades, and taking trades from the gold mine and Nova and Pulse X. And guys, if you follow these instructions, I really do have no doubt that you end up profitable. Please do make sure to do your own due diligence as well by also still asking questions and asking for help here and there when you need it. But yeah, if you do follow these instructions, I do strongly believe that you end up being profitable along the way. So please, if you do have any questions after watching this video, do not feel shy to reach out, and we'll be very, very happy to assist you at any point, to be very honest. So please, once again, if you do not understand anything, don't feel shy to ask questions. Rewatch this video if you need to. And yeah, guys, please make sure you are applying proper risk management as you are taking trades from these various charts. I know as you're seeing profits, sometimes you can get a bit greedy. I mean, that's human emotions, but please try and manage your emotions. Stick to your plan, stick to this plan, and make sure you're trading with discipline at the end of the day. And if you do that, you end up being profitable. So guys, once again, I appreciate you for watching this video to the end. If you do have any questions, make sure you reach out.